so much for joining the Land and Everything Else podcast today. I am so excited for our conversation. Probably the most excited I've been for a conversation so far on the podcast.
All
legitimately. Right. We're so excited to have you. So just again, I'm Craig Lemoine. I'm a professor at U of I. And what our podcast is we are targeting the financial professional that has clients that want to get into alternatives, get into ag, but maybe doesn't know exactly how, or learning more about the world and opportunities. And so just seeing you here and CEO Acres and AcreTrader, so excited to have you.
Thank you.
So I wanted to start our conversation today just a little bit about, what was the philosophy that you created, what you've created? Walk us through that. Where did you find a need?
The core idea, so I spent a dozen years or so investing in public equities, and the core idea behind AcreTrader is in the background, I've been buying and selling farmland, and I grew up in a farming family, loved this asset class, and had friends that wanted to participate and realized, oh my gosh, this is way harder than it should be for folks to get access to this asset class, for folks to bring investment capital to rural America. It seemed like a real win-win of a business to get into. So ultimately, through a lot of long arguments with my dad, he won, more or less. The idea of fractionalizing investments in ag land became the core theme of what AcreTrader is today. And that was about 6 years ago we started building and working on this.
So how do you go about locating property with which to fractionalize? And then if you don't mind sharing, what's the thought? I mean, how fractional does it get?
So we've got a team of folks that are underwriters and sourcers on our team. That's really when we think about what differentiates us as a business within the investing world, it's really that sourcing and diligence. And that team is out every day speaking to farmers around the U.S. We source in a fairly unique way in that we partner alongside the farmer. So most of the deals we're looking for and that come to us are coming from a farmer who wants to grow their operation. So we can turn into a win-win for the farmer and for the investors both. Of course, we have to say no to the extreme majority of offering potentials that we see. But a few of them make it through the Plinko board and the filter and the underwriting team and everything else and ultimately come onto the platform, at which point then they are fractionalized, to your question. And usually that can be down to minimums of, call it $10,000 to $20,000, which is a heck of a lot better way to enter farmland than putting up $1 million to buy your own single tract.
So if I go to AcreTrader, is the option to, all right, I've got $10,000 and I'd like to invest in farmland. This is a way to do it without the carrying costs. This is a way to do it without a lot of the complication. Within that platform, can I choose different types of land and different types of farming, or is it just kind of one aggregated pool?
You can choose different types. So we have investors come on, build their own portfolios effectively. And we put up 2 to 4 offerings per month usually. So there's a good amount of variety that comes through the platform, both in core agricultural row crop ground, as we sit around here in Iowa, as well as permanent crops and timber. And we do that. We're in 20-something states, I should know that, in the U.S., and then a few in Australia as well.
Do I need to be an accredited investor to participate?
You do.
All right. So is there just a screening process on the AcreTrader side of things?
That's right. It's pretty simple form fill activity to make sure that we can confirm that you are who you say you are. It is really important for us to adhere to all the strict regulatory and regulatory standards around our business and its practices.
Okay. So do you find you've got sort of the DIY crowd buying in, or do you have the crowd of saying, all right, I'm with XYZ wealth manager and I want to go ahead and participate directly? Share a little bit about your clientele.
We have all of the above. So it's all U.S. based investors, and it can be anyone from a professional working in a city whose family was in farming. We often find that story.
Sure.
We have lots of folks in rural America. We have lots of farmers that invest on the platform. And then we certainly do have, call it like farmland investing professionals that spend a lot of time on the platform. And then we have actual investing professionals that are not farmland people participating on the platform. So I think that's probably where you're getting to is, and we'll see them come and allocate on behalf of their clients, or sometimes they'll set up like a fund or a feeder fund type of vehicle that they can come and invest so that they can build a pooled vehicle for their clients. So there's a number of ways that we interact with financial professionals and RIAs. And I can get a little more into that in a moment if you'd like to as well. Yeah,
we will. Trust me. It's going to be good. We had a good hallway conversation. We're going to bring into this here in a little bit. I guess just kind of walking through, though, the platform. So I take my 10 grand or 20 grand or whatever it is. I make an investment directly with AcreTrader. Now, what am I buying? What does that get me?
So it is most often the way that works. It's fairly straightforward. An LLC owns the title to that land.
All right.
So you're investing in that LLC and getting representative ownership. So if it's $10,000 over, $1 million investment for round numbers, right? You're going to get a point of ownership.
Okay.
$20,000, you get 2 points of ownership in that LLC. And then the idea there is then our team takes care of all the painful stuff, right? So all the back end management, paperwork, accounting, et cetera, and provides you with any distributions that may come along with that, as well as final sale proceeds when that farm may transact in 3, 5, 10 years. Depending.
So is the goal then of that LLC or my fractional interest in the LLC, is it an income play? Is it an appreciation play? Am I looking at one or the other? I'm kind of curious how that goes.
It really depends on the investor's preferences, right?
Okay.
So there are differing return profiles across differing flavors of this asset class. I mentioned earlier row crops versus permanent crops versus timberland.
Okay.
Each of those have their own mix, if you will, of goal seek around either income or appreciation, and different folks really want different things. And we even have some products that are almost like you're playing more pure equity. You don't want the income, because we have some folks who come to us and say, zero, I don't want to deal with the income. I'm really here because I want to bet on the upside in the asset.
What's the kind of liquidity weight on that sort of play, right? So one of the huge values of investing in, non-stock and bond assets is to complement a portfolio is, of course, the correlation, right? It's quite lovely. And we look at something that says, okay, well, stocks may go up and down, and we've got this agriculture asset that perhaps has a different correlation pattern and gives us more diversification. But, what's sort of that, all right, I'm going to jump in. I've got my 10 or 20 grand. You got it. Maybe even 100, 200 grand, whatever it is. At how long should I anticipate, all right, I'm going to need to leave my money here for? Does it just depend, or are there different time frames I can choose?
Yeah, within each offering, there's usually a target duration of that offering.
Sure.
Most standard is 5 to 10 years. So we more often than not make capital improvement investments into the property. So we want to come in and be able to improve the value of that property, improve, frankly, the farmer's experience on that property and the ability to produce income on that, then produce a track record behind that before considering liquidity. Typically. We sometimes have short duration deals. We sometimes have longer, like if it's an opportunity zone or something like that, we may have longer duration deals. So it's really offering specific. And that's really our goal, is to bring the investor choice so that they can certainly visit with our team, learn about the asset. We produce tons of research and got a great investor relations team that's licensed, part of our broker-dealer. And then they can come in and construct based on their own investment needs.
Well, and I think that's what's interesting. And I think when we look at the world of equities, we're very comfortable with this idea of large cap, mid cap, small cap, micro cap, where they have growth versus value, international and domestic, and then within international, you can slice emerging markets, developed markets. So when you look at equities, it's very rare I would say, well, I need 50,000 of equities, right? Like that's sort of a bizarre way to say it, right? Because you maybe the S&P, maybe the Dow, maybe I could get niche, So when I look at something like AcreTrader, I think I get kind of excited about it because there is diversification within the tool, right, if you go looking for it, right? So you could look at different types of investments. I was wondering if you just kind of cover those three and maybe differences of each one.
Yeah, so across those three, row crop, permanent crop, and timber. And again, there's then like plenty of subsets of those.
Sure.
But generally speaking, row crops are annual crops, things you're planting every year. Things that tend to grow around this area, so the Midwest, the Delta, and most of the agricultural land in the U.S. is dedicated to annual crops. They have historically tended to perform with a pretty good amount of consistency, so lower volatility than stocks and bonds. Than stocks and most other similar returning asset classes. But that high level of consistency comes in two forms. Has come in two forms. Excuse me, income and appreciation.
Sure.
Right. So we can break apart these two contributors to what you would call your IRR, or annual return from that piece of farm ground or any other investment for that matter. With row crops, it tends to be lighter income and more appreciation. With permanent crops, moving over, it's trees, right? So think about or things that grow on vines, but those tend to have more income and less appreciation.
Okay.
Makes sense. You just maybe half the value of this investment is the trees, and trees do depreciate over time.
Okay.
So roughly those two have produced similar investment returns historically. I'm using the NACREIF index, but call it low double digits, 11, maybe 12% annual returns, but with pretty incredible consistency. The third then asset there is timberland. It's its own creature. It's very unique, has some unique potential positive tax implications for the investor. There you tend to have income far less often, but in much larger, like a big bolus comes along every 5, 10, or 20 years, depending on the maturity of your trees out on that particular parcel.
So that may have a longer duration.
It may. So
or may not.
What we'll often do, correct, what you'll often do is look for an investment opportunity with multiple maturities of tree within that. And if you're wanting to harvest the trees in their early 20s, basically, then you may buy some that's got brand new trees, some 5, some 10, some 18-year-old trees inside of there. So you're able to harvest and earn some income through the life of that.
So just kind of getting to the structure, and then we can flip into the exciting world of regulatory policy here in a hot minute. But getting into the structure of it, so there's let's say a piece of land for sale, makes it through the underwriting process, makes it through the acquisition process. You all think, okay, this is a good fit. It goes with our portfolio. So the LLC buys it, and then kind of walk through how that's managed and farmed and decisions made from that point.
So we have a farm operations and asset management team on our side. We also work with third-party managers out in the field, and we work directly with the farmers.
Okay.
So it is quite a complex operation. If you think about, for us, doing that across 40,000 plus acres all over the U.S. and internationally. But that's that team. They're dedicated every day to come into work and to oversee and make sure that we are operating those assets to the best of our ability, or partnering with somebody that's operating them to the best of their ability.
So I'm going to transition here. We're going to get a little academic, but I think for our friends and audience, this is a good conversation to have. So in order to purchase with AcreTrader, I need to be an accredited investor. And why don't you walk me through that? We talk about the accredited investor. Why do I have to be an accredited investor to work with AcreTrader?
So an accredited investor, by definition, is someone that has $200,000 or $300,000 of annual income, or $1 million of net worth outside of their primary residence, or regulatory licenses like your Series 7 and a few others that can accredit you as well. And the rationale behind that is the regulatory and governing bodies within the securities industry have looked at this and said, hey, we would prefer for folks to invest in these types of non-liquid, potentially more volatile alternative assets. We would like them to have enough comfort that if they lose their money, it's not going to be ruinous to them. And I do absolutely agree with that idea of we need to be cautious around the types of investment products that we allow consumers to go put their money into. However, there's then this much larger question of we in the alternatives industry, everything beyond farmland, private equity, venture capital, private credit, you name it. Within the world of private credits, there's a pretty strong argument that the everyday investing consumer should absolutely have access to these things. And they do. There are some certain ways to approach a few of these. But generally speaking, that doesn't happen near as often as they are able to get access to a Robinhood account or a Coinbase account. That's true. And where they're often then encouraged to speculate.
I think that from that end, Bitcoin, Ether, and any of the speculative coins, right, not being securities, I think that not being defined as a security, right, then you do have some questions on regulatory body and process. And then, okay, well, if it's not a security, then it doesn't fall under the purview of the SEC. So then do we need to apply these rules? And so I think you've seen, as somebody who has taught a lot of 20-year-olds and has often answered a lot of questions, I've seen some people make some pretty bad decisions with jumping into this idea of being overnight millionaires, but they're buying things that aren't actually regulated as securities. So in my opinion, they're buying something much riskier than, any stock I can think of. But they're able to do that through digital platforms, and we don't really stop that journey, right? We kind of say, go nuts. And I think it does mean, I'm not entirely sure when we created all this in the 1930s and reestablished it in the 1940s, and then even in 1983, we kind of redefined securities again. I'm not entirely sure we were ready for the internet And I'm not really I'm not sure we're ready for something like AcreTrader that, on social media, sometimes an ad will pop up and it's okay, well, this is available, and you click on it and you're there, and it's very, the diligence and all the reporting and all that end. So kind of taking that conversation, let's talk about distribution channels a little bit, right? So one of the things that I've worked with a lot of investment advisors and wealth managers, and the whole impetus of this podcast is to try to make some of these alternative investments more accessible or more understandable, right? That's why we're doing this whole thing, is to dive in a little bit and say, okay, I've got a client and they owned a business and they've got about $5 million, and I don't think stocks and bonds are enough for them, right? I want more diversification. How do we roll products like AcreTrader out in different spaces? Like, how do we tackle the broker dealer space? How do we tackle the RIA space? Is it going to be a DIY thing, or I'm kind of wondering y'all's journey in the RIA markets and where your thoughts on all that.
We've spent quite a bit of time in this market, and quite a bit of frustrating time. I'll be very direct, right? What I found, and then our team that was actually out there selling into that market, but I would go to conferences and engage with friends and just try to understand the pain points of investment advisors. Almost every single one of them says, I want alts or I have alts. Very few of them actually act on that. And there's this conflict there of, life is pretty easy if you can take your client's money and put it in 60/40 and not have to mess with it, versus going and filling out forms and getting K1s and a lot of the headaches that may come along with alternatives. So there's a natural friction there. I do believe, one, it's if having alts was a competitive differentiator a decade ago for the few RIAs that were doing it, it is quickly becoming, you have to have them or you die.
You have to have them available. Well, for high net worth, I think you really do. Yeah. I think in the high net worth space, not having that extra level of diversification does bring into question quite a bit lately.
It does. Where I think I found a lot of frustration is discovering what it means to, quote unquote, have alternatives on your platform. In that most of the RIAs that I visited with, and just doing a big discovery journey, as you should do when entering a new market, trying to understand the pain points, is they would say, oh yeah, we've got alternatives. And what it really was is an IR person from KKR got a hold of them 4 years ago, and they had 3 clients invest in a private equity fund along the way. I pick KKR as just an example, right? But or Blackstone, they've got their clients in BREIT, and so, man, I've really done it. I have checked that box, and I do alternatives now for those 3 clients, and I think that is really unfair to the end client. I'm a very big believer. I think the math would prove out, alternatives can be a very good thing for a portfolio. Again, you sacrifice a little bit of liquidity and trade for potential performance gains and diversification. And yet, so few folks really understand that, or understand that institutional asset allocation and how much different that looks than my individual asset allocation. You wonder, if the professionals are doing it that way, why am I still 60/40?
Yeah. I think that's a good question. And I think one of the friction points, right, the dissonance points, is, all right, I'm an RIA and I choose different compensation models, and far and above the compensation model done today broadly as the asset under management compensation model. Now, I do think there are new compensation models. We're seeing, not new is probably the wrong word to use, more different compensation models gaining popularity that perhaps do open themselves up to alts. Because when we have any AUM platform, as you're probably quite aware, you've got one of a handful of custodians that you partner up with, right? I can go to my good friends at Schwab, my good friends at Fidelity. Altruist is coming on heavy. Mm-hmm. And I can choose to say, okay, I'm in a custody with y'all. And then to some extent, it's not about you getting on my platform. It's about you getting on the custodian platform, right?
That's correct.
And I think we saw TD and Schwab come together. Altruist is I think, a rising comet in that space right now. But, I can only imagine okay, you're talking with Craig RIA is one conversation. You're talking with Giant Custodian is probably a different conversation. Have you found that to be the case?
Absolutely. Actually, the altruist team being an exception, right? They're here to shake it up, and that's
They are
really
here
exciting.
to shake it up.
We need more of that. We need more of that activity because, frankly, having a couple of platforms that dominate an industry and are very happy with the exact state of the industry, which may not be best for consumers, that bothers most of us to understand that type of consideration exists when we're talking about trillions of dollars of U.S. consumer wealth and savings, right? Like this is really, really important we get this right as a nation.
Yeah, I think that's one of the things that I've seen as well. I've had the opportunity to participate for a good decade now, right, in these conferences and events and talk with people, and you kind of have this real mentality. Okay, so we're going to do AUM fees and we're going to manage dollars actively or passively. And then we might charge some flat planning fees as well. And I think this is where, and kind of an interesting idea, when you look at other RIA compensation models, and yet to take hold, but let's say we did, you've got a few in the hourly world, you've got flat fee seems to be taking off lately again. I don't know if it'll get where it needs to go, but hopefully. And you've got this push towards, I think the basic idea is fee only, but from the standpoint of, just charging flat fees or hourly fees versus AUM fees. Your Cody Garrett style model. I don't know if you follow him. I think there's a potential there as we see compensation models shift. It's easier then to put a client in alternative products, right? An accredited investor anyway. You don't necessarily have to tackle the platform issue that you do today. So just a thought. I'm rambling a little, but it's fun to talk
because
about.
you know how much I tend to agree with this idea. Like if in alignment of incentives is a heck of a great motivator, right? And it's something that for some reason we often don't have with the person managing the money you've worked your whole life to save.
Right.
And frankly, I think individually, most of us don't spend enough time thinking about optimization of those investments. And you're exactly right. Like I'm not actually negative towards AUM-based fees because the theory is if they are incentivized to grow the AUM because they get paid more. Fee simple or fee only models are super intriguing because I'm going to pay you a flat fee, so therefore I know you're going to be honest with me.
Yeah.
But are you going to really work your butt off to make sure that I'm going to have great returns? Possibly, and like a lot of these guys really, really do, and they're doing great by their clients. There are several other models, one of which is then like the RIA that I work with is a lower management fee, and they actually have a carried interest. Okay. And taking this with a hurdle, right? Like very private equity style approach.
That is carried interest would be.
Yeah, to a client. But now I know our incentives are aligned. If that's if there's real appreciation in those assets each year, then that person managing the money is going to get paid, and I am A-okay with that. Like well,
that also works, I think, private equity certainly, and that's also sort of a bit of a hedge fund take too, right? So I think to that end, kind of bringing it back a little bit in the broker dealer space, right? So RIA platforms, right? We've got custodians, and that can be a friction point to getting into alts. But rewarding if you do, get on those platforms. Rewarding by far if you're one of the first ones on the platforms. But talking just a little bit from that point, let's move into the brokerage space, the BD space. Has AcreTrader had any luck in that world, or?
We haven't done much distribution through the broker-dealer space. We have a broker-dealer inside of our business, so we use that, our team uses that to do various structurings and things like that, and just to make sure that we are as compliant as we possibly can be, right? I think it's really important to get it right when you're dealing in regulated environments. So we haven't worked with many third-party broker-dealers, and certainly not much for distribution. It's similar to the world of RIAs. There's a wide spectrum of experiences that you can receive in working in that. And we're probably overly cautious as a company. We really want to make sure we get these things right and align with the right partners. And we haven't seen, again, we've worked with some BDs in small capacities, but we haven't yet seen something where we're like, this is the model we want to really align with and go push into.
So is there, to some extent, a capacity constraint on how much you're offering a month? Is that scaling up, or is that kind of hit a plateau, or where are you at with that?
Yeah, for our platform, I'd say no real constraint. There's something like 50, if not $100 billion of farmland that trades hands just in the U.S. every year.
Okay.
So it's a large market we're operating within. Lots of more entrants and participants in that market. We're excited to see that increased professionalization and this modern capital formation occurring in this industry. But the opportunity for us as a business is really great as long as we continue to keep our clients' best interest at heart, right?
Yeah.
And we've got to create long-term win-win propositions between farmers and investors. And if we continue to do that, then I believe we will continue to scale our business.
I love that answer. So there's always two questions I leave our guest with on the podcast. The first question is sort of a case study question, and I'd like to get your perspective, all right? So you've got someone like me, right? And I want to invest in farmland. I think I know your answer, right? So let's say of my portfolio, I've got a $2-3 million portfolio. I want to carve out $300,000 of that, maybe $500,000 of that. And I'd like exposure, both, taxable, maybe tax deferred, into ag, into land. What's the best way I could do that?
There are a number of ways you can do that. Certainly, we would really love it if you would evaluate the AcreTrader platform.
Sure.
There are also some public REITs, and that can provide additional liquidity. It may come at the expense of some volatility in public markets.
Yeah.
But those are certainly real vehicles out there, as there are a number of private equity investment vehicles for ag land. So we encourage folks to shop around, check out the entire landscape, and if one of those other options is the way you want to participate, that's still great. Like we're all like farmers at heart and farm kids at heart. Like we want to see success in this industry and continued growth in everyone's participation in rural America.
So the last question, I love that answer, is this: what would you educate, share, wisdom you would impart on a investment advisor, a CFP professional, a CHFC, somebody that is working with consumers that really wants to learn more and use alternative products? What advice would you give them?
Set your heart to it, just like anything else. Like if you want to do this, education is required.
Sure.
And spend real time on this issue. Your clients will thank you for it. I think your performance could even reflect that over time. But perhaps most importantly is if you believe it's the right thing to do, you've got to commit to it.
Okay.
And so I think there's where a lot of frustration is born in our conversation we had last night. Is I would hear a lot of lip service, and then some folks really dig in. They really go spend the extra time. They get the accreditations and go read up on this stuff, on the weekends. And I believe that is doing right by your client. And that's ultimately any of our jobs in the investment industry, is to try to make sure to do right by our clients. So if you believe that, commit.
So committing, moving through, looking outside the traditional lens, and kind of challenging and shaking it up a little bit.
Yeah, even if that includes you're not going to do alternatives, right? Hey, I studied it and I hate it. That's okay too. It's just important to go spend the time and educate yourself.
I couldn't agree more, and it's why we're doing this together. Well, thank you so much, Carter, for your time today. I appreciate having you. That was awesome.